Good morning, everyone, and happy Friday. I'm Mark Phillips, and I'm here with Harvested Financial to talk about the markets with everyone and talk about what's going on out there. And as you can see, we've got some headlines out there, and today we want to talk about the VIX. So, what's going on with our Friday special and the VIX? Well, headlines are that the VIX cash keeps pushing to drop below 20, but our futures telling a different story. So, that's what we're going to dig into a little bit here is what the VIX futures term structure looks like, what some of the open interest details are telling us, and finally analyze some of these heavy inflows into UVXY and think about what maybe that might mean. So the first thing that I want to bring up is to talk a little bit about the term structure right now in the VIX. And the term structure generally refers to the price of different futures across different terms. So I'm about to pull up a graph from VIX Central. They're a great source of information on this. But you can see here plotted on the x-axis, we have the different months and the different terms that exist across VIX futures. And on the y-axis, the volatility or the level, the price level of those futures. So the futures in the VIX space they will expire and they will settle based on the volatility realized during that period. So what this contango is showing us, contango being when the back months are further or higher than the front months, is that right now we're expecting a little bit more volatility in the future. So what that is saying is that compared to the VIX cash right now and that VIX front month future that you saw relatively low there compared to the upward sloping structure of the term structure, VIX cash right now is sitting right around 22. It's actually down about 35 cents today. Uh, but the futures are expecting there to be higher volatility. So VIX cash is saying that the 30-day out theoretical volatility priced by SPX options is around 22 right now. But the futures are telling a different story, which suggests that the futures and the participants in the futures markets are buying those VIX futures, expecting more volatility in the further out terms. So that's what contango is telling us. And it's particularly acute right now. It's some of the highest contango that we've seen relative or coming just out of an expiration. So the February VIX futures just rolled off on Wednesday, and this is some of the highest differential between the futures, the next 2 month futures, those March and April futures, and the current cash price right now. So something on the horizon? I don't know. Another item that is suggesting that we might be seeing something on the horizon has been these heavy inflows into UVXY. So along the themes of retail traders trying to squeeze the markets, there's been somewhat of a cult fascination with potentially trying to squeeze the UVXY and thinking about what these vol ETNs might look like with extreme moves and using this to quote unquote squeeze volatility. Well, I'm not totally sure that's possible. And I think for a lot of structural reasons, what's going on under the hood in UVXY makes it fairly unsqueezable. In the sense that the market makers and the liquidity providers, the participants that are taking the other side of these trades, are often completely rebalancing this against the underlying components. So underlying components of UVXY would look a lot like VX futures and SPX options. So there's a lot of replication and balancing going on here that isn't necessarily going to result in the same type of squeeze mechanics that we would have seen in something like GameStop. So inflows definitely mean there are more retail people potentially buying UVXY to bet on higher volatility and speculate on a rising volatility environment, but it doesn't necessarily it's not necessarily susceptible to the same type of squeeze dynamics that we would see in something like a GameStop that has limited shares or any equity really. The fact that these VIX products can be so directly replicated with their components, it creates a different dynamic here overall. So those are two interesting mechanics that are happening right now in the markets that are suggesting maybe we're looking towards higher volatility in the future. We saw a little bit of choppiness in the markets this week, but the reality is we're closing, or I shouldn't say we're closing, we're opening a little bit green today, and we haven't exactly come too far off some of these all-time highs that we've seen. With SPY, trading right now 391.55, really close to some of those all-time highs. So it's hard to say that we've actually experienced much volatility this week. The last point that I want to bring up is looking at the open interest here and what picture that might be telling us about volatility and volatility forecasting. This, unlike the other two that were potentially portending something big in the future, The open interest is telling us a somewhat different story. So right over here, I have the upside and downside open interest. So the way I frame this is I took a look at what the March uh, VIX options were telling us. And so by downside OI, I was looking at the puts. So the 24, 23, 22, 21, 20 put open interest. You can see those are phone numbers. Those are big digit numbers. There's a lot of open interest down there, betting on the VIX future in March settling below any of these given numbers. So right now, while the cash might be trading around 22, there's still a lot of people suggesting that at the 19, 18, 17, 16 level, we could see volatility further come in over the course of the next month. Compare this to the upside OI, and you can actually see there's significantly less. While we have 6-digit numbers on the downside size, we only have 2 lines that have a 6-digit number on the upside size, and most of those numbers are below 50,000. And one is at the 35 line, of course, has about 98,000 contracts of open interest, but for the most part, we're seeing far less options activity in the upside calls for VIX expiring in March. So really two different stories being told right here by the data. So it's hard to know that there's any strong indicator suggesting either an elevated volatility environment or a dampened volatility environment. So there are a lot of really mixed signals in some ways being given right now, and that's part of what makes markets interesting. So looking at the VIX, there's a lot of different stories being told right now, and time to keep an eye on that. So Harvested Financial, we're looking at things like this all the time. We're focused on how to use VIX and volatility features of options to protect your portfolios. A lot of what these mechanics can do are to buffer and hedge your portfolio. So that is a major reason why people are considering speculating on UVXY, is because they potentially want to bet on a downward move, either as pure speculation or as an overall hedge. One of our products, the Vol Ladder, takes into account a lot of the different VIX futures term structure to capitalize on that exposure. So we'll be here talking about the markets every single day, 8:35 Central, 9:35 Eastern. You can also check us out on Twitter at harvested_DAFE, because derivatives are for everyone. Make sure to hit the subscribe button, because then you'll get all our videos right in your inbox every single day. And thank you so much for joining us. I hope everyone has a fantastic weekend and a happy Friday of trading.